Good morning. Welcome to the Brew. I am Lex, your host. Today is the Traders Workshop. We are going to have a look at MANU and the takeover aspects of it, or the take under for that matter. So Mark's going to break it down. I'm going to chip in, and we're going to see what's out there in the option markets. So let's get to that opening bell. Good morning, Mark.
Good morning, Lex. How are you?
I'm doing great. I love is that orange background, red background? I can't tell really. What do you got there?
Well, I've had to play with some funny things with the lighting here. I'm hopping studio to studio, but it's a nice August red.
Oh, I love it. Speaking of August, what did we do as traders in the old days in July and August? Late July, early August. Go on vacation, right?
Oh, yeah. It's what this month is meant for.
That's right. So kind of a slow time. Although volume yesterday with the market being down, Jagunda was pretty robust, I'd say.
Was solid. I mean, we're only 2 trading days into August. Today's only the 3rd, but volume in July was really strong. I think we're right on par with year-to-date averages, which are, elevated even to 5-year historicals. So I think there's still a lot of activity out there, all things considered.
Yeah, I agree. I think
like that downgrade helps, right? Like they always manage to do that in the middle of August. I remember that back in 2011.
That's for sure. We don't have our pal Jason today. He is, I think, on vacation, right?
He is taking a well-deserved break.
Yes, he is. I wanted to ask him about the sell-off yesterday and what Volin was showing for Gamma and Vana clustering. I'm assuming there was some activity down below and it kind of accelerated a little bit, but we'll see. We'll check that out next week.
Yeah, I mean, it was almost a delayed event. I mean, because the news came out the evening before, but we didn't really start to slide until yesterday's session.
Right. And I think the day before yesterday, we had a pretty nice update, right? If I remember correctly.
Monday we had that reversal where we were down like 25 or 30 points in the SPOOs, and then it closed slightly green on like a really big end of day rally. So I'm sure there was some zero DTE action accelerating.
Yep. Okay, good. So today we're going to talk about MANU, Mary Alpha November Umbrella, right? Manu. What you just told me is
call signs than I did.
Yeah, I usually know these actually. The first one isn't Mary, it's Michael. So anyhow, it's Manford United. Was that what it is?
Manchester United, the soccer team.
I know everything about soccer. I'm really good at it.
Well, okay. You do know something about takeovers, though. I know you used to trade a fair amount of these back in your day.
We did a lot of takeovers in the day. So this is essentially a takeover, right? Is what we're talking about?
Yep.
Okay. Give us a little background. What's going on with this thing? And let's have a look at a couple spreads.
When I think about takeovers, I think about that Tolstoy quote. Now I'm going to get literary for a second, that all happy people are the same, but all unhappy people are alike and unhappy in their own way, or something like that.
I love it.
All takeovers kind of seem the same, but they all have their own interesting way that they get funny and weird, and they're all breaking apart for different reasons. So this is Manchester United, the soccer team, is up for bid. And I believe they announced the intent to sell last November. And stock was trading around $12 a share then.
I'm gonna pull that.
Popped on the news, interest from both sides. There's a Qatari interest, and then there's a local British interest that are both bidding for. And won't get into all the specific details, both because I don't know them and because they don't matter at this point right now. But there's been some back and forth. Stock popped as high as $26. Which represents something like a $6 billion figure for the team. These sports teams are going for bananas valuations these days.
So what kind of number do you put on a soccer team? What does a soccer team go for these days?
We didn't even know the names of the tickers when we were trading ball. So valuing a sports team is beyond above my pay grade. But I mean, aren't some of these pro teams in the U.S. like what did the Redskins went for a couple bill?
Oh, I think more than that. I think the Redskins went for 6 billion. From
It
what I
was like
remember.
6. Okay.
Yeah.
So you got to think Manchester United with that brand name and brand recognition is worth at least that.
Okay. So I don't know if this is up to date accurate, but I'm looking at some stats here in MANU. The market cap looks about 3 billion based on, I think, last night's close. Does that sound possible?
So 3 billion at $20. Well, that would put it to 6 billion at 40. So that's
yes. What's the target price? At least the whisper number for
was that 6 billion figure that I heard. I didn't hear a specific share price for it, but
okay, so that's double here. We're looking at $40 then. You're right.
But the market's discounted that, and that's one of the interesting things I think you have to look at a takeover. If this only traded as high as 26,
right,
that's putting a small probability on that deal going through.
Yeah, I agree with that. Yeah, this is far away from 6 billion. So see that move up on the screen there, the big, over here, if I can circle it. So we had that's the news, right? So that's when this baby jumped from, what did you say, 12-ish and change to, I don't know, it looks like
over
2019. Yeah. So have you ever been on the bad side of one of those? I have. It was the Chrysler one. I know I've talked about it on this epi before, where you unexpectedly walk in one day and, your eyes are fizzling and your hair's falling out because you have the wrong position on. I did. You guys never had the wrong position. You were always long juice. So
but to be long that juice, you got to be short something. So no, you always wondered where that call buyer came from yesterday, and then you came in the next morning and you found out.
Yeah, I was on the wrong side of the Chrysler one. I probably would have been on the wrong side of this one too. Although, you know what, after the Chrysler debacle, I learned, and I always talk to the retail folks about this. I learned to be neutral units, not even short of one of them. I don't mind selling premium, right? I just don't want to be short units. What's a unit? It's when you're short more options than you're long, right? I'm okay at 0. I know what I can lose it with 0 units, but when you're short 1 or 2 or 10 or 100 or 1,000, it can be painful on a move like this, right?
Absolutely. No, if you're managing any type of buy side book, you got to be flat units, in my opinion. Or long them, frankly, right? Like there's a
sure,
but definitely not short them. As liquidity providers, you could afford to be short because you could make it up on the other side. You could make it up on the volume that, hey, I'm short. I just lost a chunk of change on this move, but there's a bunch of activity. I can trade out of this. I can collect some edge. I can, move inventory, rebalance the book, make up a little bit of that. But if you're just managing a book from the buy side, the retail side, even institutional side, right? Like being short that puts you out of the game.
Yeah, for sure. I agree with that. And I think, managing your own book, if you're an off-floor retail type person now and you're making trades, you got to behave the same way. You just don't have the ability in a market that's going to hit you from behind to catch up to it. You're right. The argument for us on the floor was that we're always in the middle of order flow, so we had the ability to make that back, right? So we had a little bit of leeway and a little leverage, right? I just can't even imagine why you'd want to be short units as a retail person. It just doesn't make any sense, at least to me.
It doesn't.
So many good
something cheap you can cap, right?
Right.
Even from a capital efficiency standpoint, right? Like, why be short a naked put and put up all the cash for that put if you could just buy a teeny and cut your margin by a third?
Right.
Or more.
Exactly. So what I ended up tending to do is inevitably get myself into some weird butterfly that wasn't really a butterfly. It was a fake butterfly. It kind of had the resemblance of one when you look at a graph of my total inventory, or some kind of condor. Because I always we always tend to sell meaty stuff at the money, and we just kind of protect it with wings. And it wasn't exactly a butterfly, or a condor, but it kind of looked like one, right?
A dealer's position, they're butterflies all the way down. They got wings of this size, of this shape, of this color. Maybe they're inverted, but at the end of the day, right? You're long or short the meat, or you're long or short the wings.
Yeah, exactly right. Okay, so what with this type of trade? Now that we have, let's take it from the buy side or a retail side. What do we do in here? There's a probability of this thing unraveling, in which case it probably goes back down to the 12 area, the 10 area. I don't know.
So that's an interesting question, right? Like, I think that's got to be your first question you ask, right? Is like, what does this look like if the deal, we know what it will look like if the deal goes through, usually. Of course, there's a potential upside, but what does this look like if this unravels?
Right.
November, as a comparison, this is what I was thinking through yesterday as I was looking at this. Where was the SPX in November? We were quite a bit lower. We were a good, almost 25% lower in November.
Yep.
So I don't know that we necessarily fall back to 12 here. I think you have to adjust for the overall market environment, right? So I think you got to think about that when you're adjusting. And once something gets foisted into the public view, it becomes interesting to other bidders. So it's not necessarily going to fall all the way down because maybe there's someone else that's interested. Maybe there's a third party that's, not even bidding yet, or I guess a fourth party that's not even bidding yet. So my argument is that if this falls apart, we're going to be a good clip north of 12. We're probably, if I'm shooting from the hip and not financial advice, of course, I'm thinking more like the 15, 16, 17 range.
Okay. So what do you do? How would you set yourself up? You want to go back to the screen and set up a trade here?
Yeah. I mean, just to further that, right? Like the Qatari interest walked away yesterday and the stock, or 2 days ago, and the stock only fell 9 down to 20 from 22. So, how much further are we going to go? So when we're thinking about that break, down target price, I want that to sort of be like the tent of our butterfly.
Okay.
So like that's where I like selling my 2 options. So call it, what are we looking at here? Like 40 days?
Yeah, so I'm in September expiration, 43 days. Looks like implied vol's around 88. I don't know the details of this implied vol surface. I'm assuming that's pretty high, but maybe not.
Quite a bit though. I believe just a week ago this was trading in the hundreds. So
in the hundreds. Okay.
Yes.
Yeah, let me just take a quick look while we're here. You can keep talking about it, but okay. So we're gonna kind of peg the 16 on the downside, roughly ish 16, 15 strike.
Yeah, I might even. Like that. Is there a 16 and a half or 17? If we're only 40 days out, I'm not sure I see 25% downside even in 30 days. So I might.
Yeah.
And then you get like a little bit more room to wiggle on the downside. So maybe let's go short these 17s.
Okay. So here's what I'll do. I'm going to put the shorts in first, and I'm just going to make them twice. Okay. So that's
our how I think about a trade anyway, right? Like that short in a butterfly is your target price.
Right. It's my favorite trade, by the way. I was telling this to Molly yesterday. My favorite trade is a butterfly, or you could be a condor or something like that, but something that kind of resembles the butterfly. And we did a show, you and I, a long time ago, that if you knew where the stock was going to pin, what spread would you do? Right. Well, we came up with the butterfly for obvious reasons. So we can meld that in here too. So we pick the 17 strike to the downside where this could potentially go within 43-ish days, right?
Yep.
How much do we need to pay? I mean, are we doing a tight strike one? Are we going to kind of loosen it up? Is it going to be broken winged?
I love the broken wing because I think it gives you some outs. But if we're going to do a pure butterfly, right, you do a symmetrical on either side, and then you're truly targeting that price. Whereas what the broken wing gives you is you take a little bit more directional risk. You say, I think I'm biased this direction such that maybe it shoots through my target price. I might not win. I'm still going to have my max gain at that peak of the tent. But if it shoots through, I still do okay. I'm still in the green.
So let me ask a question. In light of the downside bias here, so if it shoots through, meaning goes farther down, do we make that upper put spread, the debit part of the spread, do we make that a wider swath because it gives us more room to make some money on that in that whole range, or do we do it the other way around?
Well, so you're thinking about it exactly the way I sort of think about it or remember it to move the legs. Like in some ways, you're sort of like selling, you're buying one and you're selling the other, right?
Yep.
And so the longer leg is, I think, of the leg where you're sort of taking more risk. Okay. So I keep the shorter leg on the leg where I think it's going to move, and the longer leg where I want to have my risk.
Okay. So what would you pick? What would you pick here?
On the upside, you could go buy the 19s, buy the 16s on the downside. If you want to go bigger,
Yeah, so let me do that real quick. Now let's just annotate this if we can. Unfortunately, I can't draw on the screen here. But look what we did. So I want people to understand this. let's do this. So this is a butterfly. It's a long butterfly. It's a put butterfly, right? Let's redo this. I'm going to start over again with the same strikes. And let's break this trade down. So the first part of the trade was our, we're calling it a broken wing. We're making the spread. This is a put debit spread. That's the first part of the butterfly, right? So this difference, $3, is what we can make on this part of the butterfly, right? It's half of the butterfly. And we're going to pay something for this. There's going to be a debit. It looks like it's about $1.30 right now, right?
These are
when
wide
you add
markets,
this,
though.
yeah, these are wide markets. When you add the other side of the butterfly, it's the short side of the put spread. We're going to do I think you said the 15-16 short version. Notice when I did the two spreads, it turns out to be the broken wing butterfly, right? And it's just a combination of a debit spread and a credit spread. Now, we still pay for this. This is a debit. It's a $1.10 debit. Does that make us feel comfortable? In which case we could move down that 19, so it's not as big of a debit, or we could move down that 15 put to kind of work to get 0 debit or some sort of credit as well. Now, we won't get a credit, but we could get a credit, but
you could
it'll
get
be tough.
Yeah.
So, are you okay paying some money for this? I mean, paying this much money for it, I should say.
Your max gain on this is going to be the difference between the strike. So the most you can gain is $3 minus $1 is 200. These are expensive markets. I pull up the what if, because I think that'll be instructive here.
Yep. Let me send this to what if. So the other thing too is
a little expensive to me, to be honest.
Yep. So here it is. Can you see it?
Yep.
Okay. And you can see where our little green honey zone is down in this region here, right? So that's that move down to 16. But we make some dough. We start making some money right in through this downside version here. So it's not too horrible. And again, we're doing this for a very specific reason, right? We're not just saying, oh, this is a great trade to make. It's a directional play because we have an opinion about what could happen to this deal, right?
It's a directional play that we have opinion about the deal, and it's also by selling those two, you're taking a little bit of advantage of that higher implied volatility here.
Right. Correct.
Constructing this as a butterfly or broken wing butterfly is going to look different than constructing this purely as a put spread, for example.
Right. Exactly right. So the other thing to note here, when I'm just looking at it with these markets, is look at some of these markets. This market is 150 at 220, right? These aren't so bad. 50 at 60, 30 at 40, 155 at 245 here on the call side for the 22 call. So some of these upside calls are looking a little wide. What's going on there, Mark? What are we saying? What's the market makers telling us?
They are telling us that they have no clue what's going on here. And the price of liquidity is expensive, right? I mean, these deals can get so funky, and you really got to be careful because as a dealer, there's so many ways things can change, right?
Right.
They can agree on half cash, half stock. Another bidder can come in and, pay with some other term sheet, or it could have an exploding offer at this time frame. And so your vol surfaces get really funky here. And I think that's, as with all special situations, like it's really useful to think about dollars and cents. What's going to happen if, hey, that back month spread looks great, but if you're long the back month and vol goes to 0, those options are worthless, and you lose all that premium. So
right, yeah, there's a lot to think about here. These are some bad points, but because these are probably no bid at 30 cents. That's why we get these little goofy values. But this is a skew curve of the September month, September 15th. Okay, so right around that same time, maybe it's one more out here. I'm just going to grab another one. Okay, so look at, what do you notice about the skew? Pretty flat, right? Usually we see this kind of shape here. And again, I wish I could draw on this. If I had my remarkable, we could do that. Darn it. But
actually, I put a screen share in. If you want to pull up, I have the current skew versus the historical. If you want to give me a screen share,
let's do it. So we'll pull that in.
Flattened.
Yep.
So the darker green line is the current skew. This is an average at 30 days. So this is an exact expiration, but this is the interpolated 30-day value.
Right.
And the darker green is current, and the lighter green is the historical, and that's much more like what you'd expect to see in a takeover. Those wings are really bid. There's risk to the downside and there's risk to the upside.
Right. So in that dark green you said is what we look like today, right?
Correct. As of the close yesterday. Yeah. Going into
so what is that? What's going on there? Obviously, the market making community is getting hit on either side. So that skew flattening means there's probabilities of similar probabilities of massive binary moves up and down, right? So they start bidding up these calls for the very reason, hey, there's news element out there that's going to change the nature of what an option stock distribution looks like.
Right. People start paying for upside because, hey, if some new deep pocket walks in and says 7 billion, all of a sudden, you've got another one of those gaps on your hand.
Yeah. What about, do you know, again, I apologize for not knowing the specifics of this deal, but is there potential for a two-part sort of takeover where they buy a piece of this and then there's going to be a stub left over? Because that also adds another element to the whole thing, which we won't have time to explain here, but we'll do it on the next one. Because we used to trade a lot of two-part deals back in the day. For whatever reason, those are very
spin-off or something like that.
Yeah. So it's spin off into a stub. It could even be, a stub of the purchasing company, right? And it has all kinds of debentures and all other sort of odd things that are in that stub. But it is part of the same underlying asset, and boxes and trades would get way out of whack. So, we haven't talked about a box is on this show, but a $5 box could go to $10 potentially. And you're thinking to yourself, how's that possible? Well, there's two different stocks trading within one that's going to be taken over and one that remains, right? So it gets crazy.
Yep. And the deliverables can change, right? Is there a cash element? Is there a stock element? Now you're pricing the vol of this other company too, in addition to it. And that's it. Takeovers, you could talk for days about that.
So let's do this. Let's go back to the screen one more time. So here's what we can do. This is the new Trade Hawk. I love it so much. We can move these around a little bit. So let's do this. Here's our strikes. So what if we move this
150, 1 1/4 for this? Did you say?
Yeah, we're paying 110.
110.
Okay. So what if we move this down? Is there an 18.5 strike? I don't even know. No, there isn't. So there's an 18 strike. So we move it to 18. All of a sudden, what are we doing here? So we're paying, what is the cost? So yeah, a little 47 cents, right?
Okay,
so
47.
That's a big change, right? When we move it down just that one strike. So we move the upper long in our butterfly down one strike from 19 to 18. Obviously, that's going to make that 18-16 spread $2 instead of $3. We should pay less for that, which we do. So we're at 47.5 cents ish. Let's call it 50 cents. Do we like that, you think?
And then what do we have that flat line or like flat line profit? If it blows through 16.5, is that about $60 a profit?
Like down here?
Yeah.
Yeah, that's about right. That's about it.
Okay.
Yep.
So
not bad, right?
No, and
this is a one lot, by the way.
A one lot. Okay. When I'm contextualizing these, paying 40 cents, I sort of think of that flat line in my broken wing butterfly is almost my target. Or expected,
So, yep. You're talking about this area down here.
Exactly, because things get funky at the end. I don't think you should ever get into a broken wing butterfly or any butterfly and expect to hit that max gain, right? Because unless you can perfectly trade out of that at exactly 3:59 and 59 seconds, you're never going to attain that max value. You're looking at a good clip below that.
Yeah, this would be wonderful in here is what you're talking about. This is max profit right at 16. You're right. I don't think I've ever taken a max profit in my life.
No, of course.
It's impossible.
Even at 357, if you're trying to frantically close that down, you're dollars away from that. So that's why I think, you get a little kicker if it hits your target perfectly. But if you're broadly directionally correct on this whole trade, you expect to make about that $50. And, you're risking about $50 on the other side.
And again, we're doing it for a directional play. I kind of like this one better. I think the smaller cash outlay is nice. And don't forget, the reason we make this profit endlessly to the downside is because we have a $2 at a $2 one. yeah, we have a 15, 16. I'm sorry, we have a $2 put spread that we're long, and we have a $1 put spread that we're short, right? So we can
Exactly.
make
So
that to the downside.
both of those go to max value. You make 200 on one, you make 100 on the other, minus the amount you paid.
Right. Right. Exactly right. So that's what happens there. Okay, this was interesting. I like it. I don't think about broken wing butterflies a lot, only because I tend not to have a directional bias as much as I should, I guess. So I don't know. I have to look at those more because I think I like those a lot. I like the guaranteed profit at beyond your wing on those.
Oh, I love that aspect of them. And like, I think ironically, I like them in a low vol environment for ETFs and broad-based indices. Like they work very well in a low vol environment for things
Right.
like SPY.
Right.
In a high vol environment, you get, while you think you want to sell vol in a high vol environment, there's too much, determinism based on the strikes where you land at
Right.
with something like this, especially in like a retail account. So they're a little harder in the high vol. They're better short vol trades in the high vol environment. If you want to go short vol in a low vol environment, the broken wing butterfly is great for that directional bias short vol.
Sure. Yep. I love it. I love it.
Yeah. It's a good trade. Very flexible too.
Perfect. All right, man, that was good. We got to run here. I like that. Let's keep an eye on this. Let's put this one on our watch list. I'm gonna add it to mine. And I haven't been paying attention to takeovers in a long time, but I'm definitely adding this to the watch list, and we're gonna come back and visit this one in the future. So I'm gonna keep watching this one. This is interesting. Good stuff. Leave it to you to figure this out, Mark. I'll tell you, you dug this one out for us today.
Oh, these are fun. I mean, these are the most interesting things to trade because you get a lot of two-way order flow. To your point about all the different things that this can, or ways this can go wrong, or places this can change. Like, really make for some interesting two-sided flow.
Oh yeah, I agree. I imagine the volume has been pretty good. It's probably not good normally in this stock, just by looking at the width of the markets. I don't have a volume up there in open interest, but it's probably really great volume right now, right? And if you're a market maker in this stock and you're trading 280 at 370, I mean, you're loving life a little bit here.
Although I will cheat and say I did put on a trade in this yesterday, and when the markets were just as wide, and I was able to get a decent fill mid-market.
Okay. Yeah, I'm looking at some volume numbers here real quick, but actually the volume's not that great. So.
Yeah, no, it boomed kind of when some of these higher bids came in, but we're trading 10, 15, 20,000 a day.
Yep. Okay. Yeah. It's not as bountiful as I thought. So that's interesting. Okay.
What's wild though is 15,000 a day. Like this is still one of the top 200 names in the marketplace.
Right. It's amazing. Okay, let's keep an eye on this one. So we've settled on the I didn't move it. We settled on the 18, 16, 15 broken wing put butterfly. I'm going to put that in the strategy tracker, and we'll kind of watch it as time goes on.
Cool. There's actually a good question from the audience here about what would you do if there is a sudden market move and the trade moves against you? Would you adjust the trade or wait it out? That's a great, and I think that's actually another great feature of the broken wing butterflies is that you have a number of different outs along the way in the trade.
Right.
Of course, the P&L graph that we're looking at is at expiration. But to the extent that it moves in your favor, right? Like if we see this drop relatively quickly, it's a good opportunity to take your money and run. You were right. You're going to be able to trade out of that for positive P&L. Like that's a good opportunity. Maybe you reset and roll it and take a little profit off the table or something. But so on the plus side, you can definitely, close out early. If you're directionally correct, you're going to see that P&L, monetize quickly. But on the downside, I shouldn't say on the losing side, if this goes up, you also do have the ability to get out of the trade and cut your losses. Yep. That extreme loss only materializes at expiration. So if you're in the first half of this trade cycle, so what we were looking at like 49 days, in the first, 2-3 weeks, even, you're going to have a bunch of different outs. If all of a sudden thesis changes, another bidder comes in or whatnot,
Right.
and stock ticks up, you can kind of cut your losses and close out, relatively early.
Yep.
Maybe you roll it up and, move the legs, but a
Sure.
lot of different ways to move this around throughout the trade.
Yeah, and plus you don't have much invested in it either.
No, yeah.
So you can bob and weave with this pretty well. Okay, I'm gonna model this one in strategies and throw it in and kind of keep an eye on it, and we'll report back on it next Thursday.
We should have taken the other side. I wish Jason was here.
He'd take the other. We're gonna make him take the other side. He doesn't even know he traded this on the other side.
Still,
He's got the opposite of it, and we're gonna look at that other trade that we did where we rolled it. I want to see what that's doing too. I
think we got another week or two before Expo, but we rolled it to August, I think. So that's
very small gain in it right now. I just looked at it real quickly, so up very little.
So I think I'm the long side, right?
Yeah, you're winning, but just barely $6.50, and that includes the loss from the first trade. We had to take a loss to roll it.
But we locked in a little bit of profit, right?
I think we ended up losing a little bit because we rolled well after. We didn't roll when we said we rolled.
Oh, that's right. We rolled. Okay,
yeah.
Well, whatever. We'll let Jason actually be here to take his fill next week.
All right. Very good, very good. And then we're gonna watch this Manu thing. I'll model that after the show, and then we'll look at it next week as well. See how we're doing.
All right.
All right, cool, man. Good. Well, you have a great rest of the week and weekend. And we will chat. And that's the closing bell, Mark. See you, buddy.
Right. It's the opening bell. Happy trading, everyone.
Closing bell for us.
Right.